This is the Friday, January 25th, 2013 version of the Market Plus segment. Joining us now is Tom Fitzenmeyer. Tom, welcome back.
Yeah, thanks, Mike.
We've had a lot of questions submitted from our people on Facebook and Twitter, and so I'd like to get started here. Daniel in Kansas is asking, when or which supply and demand factors affect the 2013 grain oilseeds markets, and how or when will non-commercial traders respond?
Well, the predominant factor there is what South America produces. And it looks like they're going to have a good crop. Argentina's gotten their beans planted. They were a little wet early. They're dry now, but seem to come along. Northern Brazil has been getting rain right along. Matter of fact, a little too much in some of the early harvested areas. Southern Brazil is a little dry, but they're expected to get some rain. Overall, they're going to have a very good crop, and it's going to get exported, and that's going to be our big headwind. Now, as far as acreage goes, acreage isn't going to be probably all that much different than we had last year in the U.S. We have to remember they're producing twice as many beans as we are there now, so we're sort of we've got good, our logistics are good, we can move the product, we're a reliable supplier, so we've got all that going. They're going to use us to fill in the blanks, but that South American crop is going to drive whatever happens probably for the rest of the year.
And non-commercial traders, typically they're going to wait to see what happens and then make their move once a trend is being established?
The funds were a big factor last year. They've been absent, and like we alluded to in the show, S&P made new highs this week. And there's a lot of interest in the funds in the market. They want to be in the market that's going, that's moving, that's making new highs, that's doing things, and they don't see that happening in the oil seeds. With like I said, with the big South American crop, it's like what is there to get excited about? So there's going to have to be some good compelling fundamental reason to draw them back in, I think, and their lack of participation is why these rallies continue to stall out here. They've been short. They've covered those shorts. It doesn't seem like they're going to be enticed to be long.
Not at all, like we saw last end of the summer and into the fall.
Unless there's a big weather blow up. I mean, I'm not saying that can't happen, but at this point, it doesn't seem likely.
Now, you mentioned logistics, talking about Brazil. How are they coming along in terms of being able to get their beans from Mato Grosso, for instance, to the ports?
They're better than they were, I guess.
Okay.
And they're making progress, and they've got cheap labor, so that contributes to them doing things differently than we would do them. I haven't been there personally, so I can't testify to this, but everybody that has tells me things are improving and they're getting better and they're spending money, and I think that's going to continue to.
And we see those beans coming to market quicker than we have in years past.
Exactly.
Okay. Well, we have another question here from Brad in St. Joseph, Illinois, and we talked about this a little bit, and he's kind of given you an opportunity to expand. He says, other than the dollar and the crude oil, what other things in the outside markets, if anything else, do you watch to give you some perspective on where grain prices are headed?
I mean, those are the two primary ones. Obviously, weather is another wild card that you have to watch constantly. I guess the things I mentioned are probably the main outside markets that I would watch.
Well, and I'd like to just kind of, as a thing that could impact prices moving into the spring, have you been keeping up on the Mississippi? How do things look on the Mississippi River system?
I think there's been enough snow that and they blasted the rocks out of there that were kind of a problem. So I really, from a farmer's perspective, I almost, going into spring, worry more about being able to move fertilizer up the Mississippi than I do our ability to move grain down the river. I think there's been enough snowfall. We're probably going to keep the river levels up high enough to be able to move product, but I think that's becoming less of a concern to the market.
Okay, it's less of an issue that we're going to run into, so there's not much impact on price.
Right.
Justin in Blooming Prairie, Minnesota, is asking about new crop. He's curious about when to market new crop corn and what tools would be best used in this environment we've got where we could see big variability by the end of the year.
So here's my deal with new crop corn. I go out and put on meetings, talk to farmers, and everybody's scared to death to sell new crop corn because it's so dry. Hardly anybody's got any new crop sales on the books. completely the opposite of a year ago. A year ago, everybody was selling new crop corn, and that didn't work out so good for them. So everybody's saying, well, I don't want to get stuck that way. They want to see how the insurance price is established during the month of February, so they're kind of waiting for that. My opinion on how to market grain facing the potential for drought like everybody's concerned about is that you market your grain normally. Wherever you think the good price is, which I personally think is around $6, maybe a little better, and then you defend that against the drought with some kind of a call strategy. I personally would be buying the $6 call, selling the $7 call. You can do that for around 28 cents. Gives you $1 upside potential. Those are the tools that I would use. Or buy yourself a put, sell an old crop put on July corn to help pay for it, sell a call to pay for it, and develop some kind of a strategy that way. Those are the two approaches I guess I would take.
Even this far out in the year, we're not going to see much impact with the time value or anything.
Well, that's why if you buy a put, you have to sell a call or sell a put or sell both to help pay for that put that you bought. Anytime you're buying option premium, it's expensive, and it sets people back when they see it. So you have to find some way to sell something to offset that.
Okay.
And so that's why I'm selling new crop calls, old crop puts, and helping the premium I collect from those to pay for that new crop put that I'm buying.
And same advice for soybean producers?
Yeah, basically. I mean, again, I don't think the upside potential is real great. November beans up in that 13 to 13.50 area. I think if you can get that out of them, you probably better be making some sales. And then again, defend it with a call option strategy of some sort.
All right. Thank you so much, Tom. Appreciate you being with us today. Have a great week, and I want to thank all of you for sending in your questions via Facebook and Twitter. We appreciate it. Keep sending them, and we'll keep getting expert advice right back to you. Thanks for watching, and have a great week.